to take a few minutes to walk you through some of the concepts in Chapter 2. Chapter 2 starts off by describing the differences between job order costing and process costing. We are going to focus on some of the journal entries associated with this job order costing. They are separated into 3 sections: accumulate, assign, and adjust. Hopefully some of these journal entries will just be a reminder from 101 and a quick review. So we'll start there with accumulate. You can follow along on your worksheet. So these accumulate journal entries require 3 separate journal entries, one for each product cost. The first one records the purchase of raw materials on account. We would debit that raw materials account, and we're going to credit our accounts payable. And that would be for the total amount of $150,000. This will increase both of those accounts and give us some raw materials to build our products with. The second piece of these journal entries for accumulate is to record our factory labor. One thing I want you to remember is the word incurred will always mean actual. That's going to help you through a couple of different chapters in this book. To record that factory labor, we're going to debit an account called factory labor. This is where we're going to accumulate all of our labor costs. Here we have $20,000 of factory labor, of which some of that's related to payroll taxes. So we debit that factory labor for the full $20,000, and then we're going to separate it out to wages payable as one credit and employer payroll taxes payable for this second credit. So this wages payable would be for $19,000 and employer payroll taxes for $1,000. The third journal entry is going to relate to the overhead account. It will give you a couple of different costs that these relate to. Remember, incurred means actual, right? We already wrote that down. The second part that we want to remember is the fact that your manufacturing overhead, a debit to this, is for our actual amounts. So you're always going to debit your manufacturing overhead. And I'm going to abbreviate that with MOH just to save us some time. A debit is always actual. I should spell that right. So here we're going to debit our manufacturing overhead account, and we're going to credit each individual account. The first one is for utilities payable, and that was for $600. We have some accumulated depreciation. Now remember, typically our debit here would be depreciation expense, but that's all going into our manufacturing overhead account now. And then we have some other, so I'm just going to put that to miscellaneous or various payables. And that's for the $2,000. So our actual manufacturing overhead would be a total of $5,600. So now we're going to move on. We've accumulated the costs we need, and now we're going to assign them. We'll assign them to our specific jobs. This again is 3 steps because we have to include our direct materials, direct labor, and overhead. So let's take a look on how we assign these through journal entries. So in number 4, we're looking at our raw materials being assigned into this job. The good part about any assigned journal entries, one thing to remember, we're always going to have a debit to work in process. So no matter what, you just start there. You did something right. Debit our work in process. In this first one, we also have some manufacturing overhead. Any of those indirect costs are going to go to manufacturing overhead. We have $45,000 going into work in process, or going into work in process. We have $10,000 of that is related to our indirect cost, which is manufacturing overhead, and all of this is taken out of our raw materials. So we are going to credit those raw materials, showing that those have been assigned to a job and used. The second piece of this is our labor cost. Remember, we've already accumulated our costs, and now we're just assigning them to our jobs. So here again, any of those direct costs go directly to work in process. Indirect costs go to manufacturing overhead. And then our credit is to decrease that factory labor account that we built when we were accumulating our costs. So for our indirect labor, we have 15,000 direct costs, 2,000 indirect cost, which means we've used a total of the 17,000. And the last piece of this is to assign our manufacturing overhead. We use a predetermined rate for this. We always debit that work in process, which means by default our credit is to manufacturing overhead. So a credit to manufacturing overhead means we're applying our manufacturing overhead to our job. So our credit means, now looking at this problem, our predetermined overhead rate is $12. We actually have 1,500 of direct labor hours. So I'm going to take that 1,500, I'm going to times it by my $12 to get a total of 18,000. I'll debit that into my work in process and credit my manufacturing overhead. The final step in this process is to adjust. We have to adjust because the amounts that are going into our work in process for our manufacturing overhead for each particular job is just an estimate based on that predetermined overhead rate. So our final step in this process is to look at that manufacturing overhead account. Remember these T accounts, where on the debit side are our actual figures, the credit side are applied figures. We've applied 18,000. Now let's backtrack and look at what our actual figures were that we put into the account. We accumulated 5,600, another 10,000, and another 2,000. For a total of 17,600. What we have to do here is turn this account into zero. And to do that, we have to look at which side needs what amount. We've applied 18,000. Our actual amounts are 17,600. So we are over applied by $400. We need to therefore debit another $400 to get that to equal zero. So to do that, our manufacturing overhead again flows into our work in process for the supplied account. So at the end of the day, that work in process is going to our cost of goods sold. So we need to adjust our cost of goods sold. Here, that tells me that I need a debit to my manufacturing overhead of $400 and a credit to my cost of goods sold for $400 to adjust that account to be accurate. The other thing that this chapter runs through is our predetermined overhead rate. So I'm going to walk you through a quick example on how to do that. And this in your worksheet is number 8. The first thing we need to do is determine what our predetermined overhead rate is. To do that, we use a simple formula. It's estimated total overhead over estimated activity, or allocation base. The one thing I do want you to notice here, I'm going to circle this, are these two words. This is estimated divided by estimated. So when you're getting these paragraphs full of information, make sure you try to pull out those estimated figures. In our example here, our estimated total overhead is $150,000. Our estimated activity is in hours, it's $100,000. Therefore, our predetermined overhead rate is $1.50. And this predetermined overhead rate is usually abbreviated POHR. Again, trying to save some space. So our second step after we get our predetermined overhead rate is to multiply this by our actual activity, and that is going to equal our applied overhead, kind of like we have just done in the example before this. So our predetermined overhead rate we determined was $1.50. I'm going to multiply that by my actual activity, which is 105,000 hours, to get me an applied overhead of $157,500. The last step here then is to determine, based on our actual activity and our applied overhead and our actual overhead, are we under or over applied? To do that, we'll just take a quick look at that manufacturing overhead T account. Remember, debit is actual, credit is applied. I can put these figures in. Oops, this should be a 5. My actual figure is 160,000. So if I look at this, it tells me I applied 157,500, but that wasn't quite enough. So I am under applied. I know that, and now to determine how much, I'm going to set that account to 0, see where I need to fill in, and I need to fill in 2,500. So I'm under applied by 2,500. If I needed to do a journal entry to adjust for that, since it's under applied, I'm going to debit my cost of goods sold and credit my manufacturing overhead for that $2,500 because my cost of goods sold was not enough. So hopefully that helps. Let me know if you have questions. Thanks.